Hello friends, how are you? Bonjour les amis, comment ça va? Adab, salam, नमस्ते, सत श्री अकाल, नमस्कार. कैसे हैं आप लोग? Today's video is about some ETFs that are covered call ETFs. Those are Bank of Montreal's ETF, and they generate about 6% return on your investments. So if you are a retired person, or you are close to your retirement, or if you want a steady income on your investments, I would suggest have a look on these 5 or 6 ETFs. Look at their portfolio. I'm going to give you some information about those ETFs, and if you like them, you could consider adding them in your portfolio. However, I would like to warn you about these ETFs that these are ETFs that are covered call ETFs, so that you should not expect much growth in these in the value of these ETFs, because they write the option trading, and then there's a premium that generates extra income. So we have to compromise for the growth of the value of the ETF. So if you have time horizon is growth, then these ETFs are not suitable for you. But if your time horizon is short term, you need steady income every month, those will be a good asset to your retirement portfolio. The first ETF is BMO covered call Canadian Banks ETF. Its symbol is ZWB.T. As of 30th of April 2021, the price per share of this ETF was $19.86. It gives you a dividend of 10 cents per month, which turns out to be annual dividend of 5.4% per year. This ETF is invest in all Canadian banks, which includes the top 6 banks such as Bank of Montreal and Toronto Dominion Bank, Royal Bank of Canada, Bank of Nova Scotia, and Canadian Imperial Bank of Commerce and National Bank of Canada. In addition to that, about 26% of the total fund money is invested into an index BMO Equal Weights Bank ETF, which symbol is ZEB. So that's how this creates some sort of growth as well. So this is my first choice. My second choice is BMO covered call US Banks ETFs, ZWK.T. As of April 30th, its price was $30.62. So this is an ETF that generates lots and lots of income. It gives you 18 cents every month dividend. That turns out to be 7.3% dividend yield. So this is a good ETF because it's investing into US banks. However, US banks are more volatile. So, but then you get more income from this ETF. Top holdings of this ETF is Emory Price Financial Incorporated, Bank of America Corporation, Citigroup Incorporated, Truist Financial Corporation, U.S. Bancorp, First Republic Bank, M&T Bancorp, PNC Financial Services Group Incorporated, Citizen Financial Group Incorporated, and JP Morgan Chase and Company. So these are the top 10 of 10 banks that where this ETFs invest the fund money, and then it writes options trading on these banks and generates extra premiums, so provides 18 cents a month on your investment. So compared to this, if you go to straight ETF, which is on same banks without option trading, your return is around 2%. So you can compare the dividend rate of 7% versus 2% dividend rate for a simple ETF. Here we go. So the choice is yours, which one you want to take. Okay, the third one is BMO covered call Dow Jones Industrial Average hedged to Canadian dollar ZWA. This ETF is investing in US different equities like financial is about 20%, healthcare 18%, industrial 17%, and technology about 17% as well. Its price is $26.21. It generates a monthly dividend of 10 cents, which turns out to be 4.7% annual dividend yield. So the top 10 holdings of this ETF are United Health Group Incorporated, Goldman Sachs Group Incorporated, the Home Depot, Boeing and Company, Amgen Incorporated, Microsoft Corporation, Caterpillar Incorporated, McDonald's, Honeywell International, and Salesforce.com. However, if you are not happy with ZWA, which gives you only 4.7% annual yield, you can pick another US based ETF, which is BMO US High Dividend Covered Call ZWH.T. Its price as of 30th of April 2021 was $21.14. It invests a little bit less on financial, 16%, less on healthcare, which is 13%, and technology it highly invests, so it is about 23%. It generates 11 cents a month dividend, which turns out to be 6.3%. But here you should note that this ETF is generating more income, so you have to compromise on the growth side of your ETF. This ETF, the fund is invested into several US equities, Bank of America Corporation, Cisco Systems, the Home Depot, JP Morgan Chase, Microsoft Corporation, International Business Machine, IBM, AbbVie Incorporated, Chevron Corporation, AT&T Incorporated, Coca-Cola, and Apple. If you are interested in Canadian equities, so there is another BMO option covered call option ETF that invests mainly in Canadian equities. Its name is Canadian High Dividend Covered Call ETF ZWC.T. As of 30th of April 2021, its price was $17.64. This ETF gives you lots of income. It gives you around 11 cents every month on each share, which turns out to be 12% return. It turns out to be 8% return on your investment. It return only in terms of dividend plus some growth, but its growth is very slow. So it invests into multiple companies in Canada, including Royal Bank of Canada, the Toronto Dominion Bank, Bell Canada, Bank of Nova Scotia, Canadian Imperial Bank of Commerce, Manulife Financial Corporation, Enbridge, TC Energy Corporation, Bank of Montreal, and Great West Life Company. So this is the ETF that provides you more income. However, I would say that because it heavily invests into communication and financial, its movement is stable, but it provides you less growth in the value of your ETF. Okay, so my final pick for income driven ETFs is BMO Covered Call Utilities. Its symbol is ZWU. Its price was $12.73 as of 30th of April 21. It invests in utilities, communication, and energy. The price generates about 8 cents per month dividend, and that turns out to be 7.6% annual dividend yield. It invests into top holdings, including Enbridge Incorporated, Southern Company, Fortis Incorporated, TC Energy Corporation, Duke Energy Corporation, Verizon Communication, AT&T Incorporated, Bell Canada, and Exelon Corporation, and also about another utilities ETF known as BMO Equal Weight Utilities ETF, ZUT, which is not a covered call ETFs. So these are the top holdings of this ETF. So in total, these ETFs generate on average about greater than 6% return on your investment plus some growth. But I will like to warn again here that when you pick any covered call ETF, you should be ready to receive income, not loss of growth. So I hope you like this video. So we'll continue and with more information about these upcoming ETFs. I hope you like this video. So for today, this is some info, and if you find it useful, please subscribe my channel, give me a thumb up, leave your comments on the comments box so that I can get some encouragement from you guys. So till the next video, goodbye. Have a good day.